Welcome to Mad Money. Welcome to CNBC's One Market in San Francisco. Other people make friends. I'm just trying to make you a little money. My job is not just to entertain, but to educate, to teach you. So call me 1-800-743-CNBC. Tweet me at Jim Cramer. Do-over! Yeah, today we got a do-over. Do you know how many times that I've seen anything like this in my 42 years on Wall Street, where we get an event that kills the market, and then a few days later it's totally undone? It almost never happens. It occurred after the misery of Liberation Day, and now we just got our second do-over in 1 year. That's right, on Friday, the President of the United States threatened to slap a 100% tariff on Chinese goods. No need to even talk to them. But then yesterday he said, no worries, the relationship was fine. Talks are back on. So the market that plummeted Friday came roaring back today. Dow gaining 588 points, S&P climbing 1.56%, NASDAQ jumping 2.21%. There's just one problem. As tremendous as today's rally was, the market didn't come all the way back, not nearly. And the stocks that did come roaring back were the most speculative ones, the names that I'm most worried about. More on that later. For now, let me break down what happened. On Friday, the president, disturbed by China's move to tighten the supply of rare earth minerals, decided that enough was enough. Dealing with the Chinese, trying to talk with the Chinese, simply doesn't work. Better just to raise the tariffs on China to 100%. It was a calculated bet that China couldn't afford to lose our markets, even though the core issue here is that we can't afford to lose their rare earth minerals. China believes they got the cards. This weekend, we got some numbers that support their view. China's total exports to destinations other than the United States grew nearly 15%, while their exports to the U.S. plunged 27%. Even with that gigantic fall-off, China's total exports in September rose 8%, the highest of the year, which just maybe they're learning to live without us. Normally, I'm not a big believer in statistics from the Chinese Communist Party, but there's no point in lying about these trade numbers because we'll get numbers from their trading partners, too. Maybe it's no coincidence that this weekend, President Trump softened his rhetoric to the point where things sound a lot better. As he posted on Truth Social, quote, don't worry about China. It'll all be fine, end quote. I don't know what the fine really means, frankly, but I'd assume it doesn't include a 100% tariff. Hence today's snapback. The leaders, tech again. We got this gigantic deal between semiconductor kingpin Broadcom and OpenAI. To put it in plain English, OpenAI is going to design chips made by Broadcom for the equivalent of 18 Hoover Dams worth of electricity. That's how they measure these things these days. Okay, stupendous. The third huge deal that OpenAI announced, first with NVIDIA, then with AMD, now Broadcom. Broadcom's a $1.7 trillion semiconductor networking company with a software kicker that, I don't know, no one ever talks about it. It rarely gets the attention it deserves. We happen to have the creator of Broadcom, President and CEO Hock Tan, on tonight to explain the remarkable deal he just negotiated with OpenAI. I know many of you think the whole AI story is pie in the sky. Pure bubble. I got bad news for you. OpenAI needs all this computing power because there's tremendous demand for ChatGPT in all its different phases. They want to defeat all the other hyperscalers using all the compute they can get, and they need to make ChatGPT much stronger and better. Away from the AI data center complex, the rest of today's big winners were some of the most speculative stocks out there. The leader, Bloom Energy. That's an extraordinary company that can convert fuels like hydrogen or natural gas into energy without combustion. There have been a great deal of skepticism about this one, and Bloom's been working on it for the better part of a quarter of a century. It seems to have come into its own, given that Brookfield, a very talented investor in energy and infrastructure, just announced a $5 billion partnership with Bloom to provide energy to, you guessed it, the data center. I mean, wow. This fuel cell verification took the heads of the myriad short sellers. 18% of this float was short. Ouch. And cut their heads off. Encouraged a host of chasing investors to go back to the speculative favors. That's how a nuclear power plant like Oklo, I mean, what is this thing? Shot up 16%. While monolithic power systems, I haven't heard of them in a long time, gained 8%. NuScale Power jumps almost 15% as usual. These spurred rallies and speculative fellow travelers like the quantum computer specialists, like Rigetti, D-Wave Quantum, we've had them on, which rallied 25 and 23% respectively. The last two were boosted by J.P. Morgan, an announcement of a $1.5 trillion security and resiliency initiative that identified quantum computing as part of a frontier and strategic technologies imperative. We know this rare earth mineral situation isn't going away, so our government's redoubling its efforts to exploit ones that can be found here in America. Hence why MP Materials zooped another 21%. Others like USA Rare Earth, Critical Metals, and Ramaco Resources, which I profiled just 10 days ago, soared 18%, 55%, 11%. It didn't hurt that the same J.P. Morgan initiative that backs quantum computing singled out the critical metals, too. These stocks are experiencing gains that you couldn't make in a year. Many of the staid S&P 500 stocks left way behind. It was just another day in what I call the year of magical investing. Thank you to the late Joan Didion, my favorite writer, for the inspiration. A day where the specs outshone the regular stocks that let us down when the president first clubbed the market with that 100% tariff gambit on Friday. The bottom line, I don't love a day like today because the speculative stocks make for bad leadership. It's much more encouraging when the tried and true do the leading, even if the tried and true means the Magnificent Seven and their fellow travelers. Let's take calls. Let's start with Dustin in Oklahoma. Dustin.
Booyah, Jimbo. Good to talk to you again, my friend. Hey, I am in chapter 10 of your book right now. I'm loving the book right now on figuring out what a stock is worth. I'm really enjoying that chapter. I appreciate it. I called today to ask you about one of my speculative stocks. I call it a speculative stock because it's a really high PE ratio right now, which I'm learning more about your book right now. And wanting to know more about Dutch Bros, if you think that's still a good investment moving forward.
I think Dutch Bros, the decline is actually creating that opportunity. Now, it does have a very high price earnings multiple. At the same time, I do feel that this is a growth company. It's going regional and national, and therefore it can be bought right here. You buy some, and then you wait to the 40s if it goes down there. That's the way I'd play it. Jim in Texas. Jim.
Hey, Jim. How you doing?
I am doing well. How about you, buddy?
I'm good. I'm enjoying your new book, man.
Oh, thank you. Thank you very much. I appreciate that. How can I help you?
Hey, listen, I got about 1,000 shares of a stock that's rock and rolled over the last 5 years. And I just want to take some of the profits, not all of them. The stock I'm referring that I had is Southern, SO.
You got to take some Southern off the table. Why? Because Southern's a utility stock that hasn't shut up this much since it was Commonwealth and Southern in the 30s. My tip of the hat, by the way, to my friend Andrew Sorkin, whose book 1929 is coming out, and that's when you would find out how big Commonwealth and Southern was at one point. All right, even though we rallied today, I much prefer a day where speculative stocks aren't the leaders, but the tried and true are. On Mad Money tonight, I'm taking advantage of my time out in San Francisco by sitting down with some of the top minds in the business. First, I'm hearing directly from the CEO of chip legend Broadcom on the heels of that company's collaboration with OpenAI. Then, how is the apparel sector really doing? I'm going to see CEO of Levi's to get a read on the consumer. And AI and cybersecurity are front and center here in Silicon Valley. So I'm going to take a look at the CEO of Rubrik. What a company. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Look at the stock of Broadcom go. This morning, this big-time maker of chips, networking equipment, and infrastructure software announced a major deal with OpenAI, and the stock shot up nearly 10% in response. This is just the latest in a string of big data center deals that make me real glad we own Broadcom for the charitable trust. Luckily, we're here in San Francisco, so I got a chance to speak with the one and only Hock Tan, the president and CEO of Broadcom, earlier today. Take a look. First, Hock, it's an honor to have you on the show in a very big day for your company.
Jim, thank you for saying that. It's a privilege to be here.
Oh, thank you. Now, one of the things that people, I'm going to dispel something immediately. There are a lot of people who make these criticisms about what's really going on here. I know you, as you say, I am not a cheerleader, as you said in the Goldman Sachs Communicopia conference recently. You're not a cheerleader. You're a hard-nosed businessman. You're not doing this because you hope something will happen. You're doing this out of necessity. It's needed.
Absolutely. There's a real hard business case for doing what we're doing, which is investing and enabling those select few customers that we chose to work with in enabling them to run their LLMs. And the biggest thing they're short of is compute capacity.
Now, one thing that did concern me is that to put in perspective how much power you need, you're talking about nearly 18 Hoover dams worth of power. Who's doing the back end for you? Who are making sure that the power is available? I know you wouldn't just stream it up.
No, and actually there is a lot of power out there, even in America.
There is.
There still is. It's just that you need time to get there. There's available power. We hear a lot about it. But what's needed at the end of the day is usable power. And there's a lot of available power. We've seen that. We've seen the announcements that Oracle made on finding power and making deals with OpenAI. More quietly, I know for a fact people like Google, people like Meta and Microsoft has access to available power. The key now is to make these sites usable. And a lot of it comes not just one big, we hear a lot of news about 1 gigawatt, 2 gigawatt. Sure, it's great to have that, but you don't need that for generative AI, especially in the case of inference. You want it distributed. So you can find lots of location on the power grid for 50 megawatts, 100 megahertz, 200 megawatts, and they're very available. Now, less and less so, no doubt, but with time, this becomes available and becomes usable power.
Right. I know, as always, you are thinking ahead about what will happen. I don't think people realize. People say, oh, they play this guessing game. Oh, is it going to be this company? Is it going to be that company? Maybe it's Anthropic. Maybe people should be looking at it differently. How many companies can do customized silicon on scale? How many would you work with? And always, you don't do anything where you sacrifice the margin for the shareholder.
Absolutely, Jim. And we've been thinking about it for a while now, and we've been learning, especially the learning experience for the last 7-8 years with Google, who is the first player we have engaged with on creating custom AI accelerators. And that was back 8 years now. And we still engage very deeply. And both of us learn as we progress during that 8-year journey. And what we have chosen to do is we look at the market, the players in it, and we chose to really address and select a group of players who are really creating super intelligence, I call it, or generative AI. Another way of putting it is these are the guys, the source of intelligence come from creating a better and better generation of models, foundation models called LLM. Now, you don't do LLMs, you're not in this game.
No, right now, no one else is in this game at this scale. You are. I am concerned, you've always been a purchase order outfit. In other words, no work until you get a purchase order because you are a business person, not a dreamer. With this deal, we don't really know the economics with OpenAI, but I know you wouldn't go into a deal unless you're satisfied that they will work. OpenAI is a private company. Can you give us some assurance of what you see that makes it so that they're definitely worth working with?
Well, for one, Jim, I mean, they are one of those few players in the forefront of creating foundation models and best. I mean, they are private, but I think there's a sense of their choice of being private. But they are valued, the last valuation even as a private, over $500 billion. And their revenue is growing at a very strong rate. And so, as I said, the first step you want to look at this whole game is how real is generative AI. I think that's where it begins. Then you look at the key players in it who are going to be there over the next 3-5 years. And these are the people we elect, and they select us too, to be fair, and we're privileged to be that way, where we invest in technology with those guys. And you say we're very hard-nosed businessmen. Yes, we are. We look at it very hard, we calculate it, but that doesn't stop us from looking out 3 to 5 years and looking at this phenomenon, this wave called generative AI. And what it is trying to create intelligence through foundation models, which, by the way, in a lot of cases, is a bunch of equation algorithms on a whiteboard, which until more recently, a few years ago back, when the ChatGPT moment happened, where you're saying you can translate what is in theory on whiteboards into actual intelligence through models by creating compute capacity that can actually drive, train, and create basically intelligence information through this whole process. So we believe then we pick about 7 players today that we are working very closely with. And 4 of them are now real customers. And we define customers in a hard-nosed manner, you indicate, Jim, as those guys who have given us production purchase orders at scale.
Now, I have to believe that the others have the ability to give you a purchase order. It's just that I can't ask you to ask customers who haven't been finished yet. That's not fair. But your confidence in this narrow group of customers is incredibly high.
Yes, we feel very good about it because each of these guys need a lot of compute capacity for them to basically play in this game and eventually win in this game of creating the best foundation model in the world.
Right, I know you say, and from outside on hardware, compute capacity, to some extent, rubber hits the road on this. It's really incumbent on us to keep optimizing, pushing the envelope on leading edge technology. So you have to stay ahead of the other guys.
Well, to be honest with you, the main competitor we have is merchant silicon because they were there first. Right. Outside of Google, they were there earlier.
I don't want to get a cage match between you and Jensen. That's not paying off.
He's a good friend.
I know. You are not necessarily a competitor. You keep saying you need many different partners to get this done, including companies you've competed with.
The market for compute capacity is large and growing much faster than any one of us can handle. Even though the path towards, for these few LLM players, they want to create a platform. You know, Charlie mentioned the trifecta.
Yes.
Of not just an accelerator for compute, AI accelerator, networking them together into a cluster, and the software stack that engages, that allows models to run on the chips. Essentially, you're trying to create a platform because that platform, if you are a large enough player like foundation model developer, is what's enabled you to generate the best performance per watt and best performance per dollar. Both in two respects. So that's inevitable. But having said that, the journey towards that, while we're going through this wave, the requirements for capacity and compute as you deploy, as you push the envelope on foundation model, is more than doubling every year. So that's enough for all of us to participate, frankly.
Well, that means that you're just trying to meet the demand that's already out there.
Yes.
Incredible. Now, one of the things that your company became $1 trillion company based on VMware, by software, by non-AI. What are we doing with all these other parts that we kind of get for free, given what you're doing with AI?
Those parts are doing fine.
Right?
VMware we acquired 2 years ago is doing extremely good. It's throwing off huge amount of cash, free cash flow, while it's growing at the same time. It's a great asset. And I'm so pleased I bought it.
All right, now I'm never going to try to do the 25-26 game. I'm not doing a model, okay? But you do reference 2030 and how exciting it can be. So this is, I mean, I've known Hock-Tan for many, many years. This is the most excited I've ever seen you about something.
Well, it is. We are in a wave, in a phenomenon, as I call it, I've never seen before. That it's not cyclical. It is, as you put it, Jim, secular.
Right, you're talking about railroads. You're talking about internet. You're talking about this. You're talking about the fourth industrial revolution.
I'm talking about critical utility for society. We're talking about generative AI. Now, I don't try to sound a bit hype, but you think about it logically. The GDP of globally is about 110 billion, give or take. 100 trillion, 110 trillion. Fully 30% of it is valued from industries related to knowledge-based, technology intensive.
That's what can go up.
And you put in generative AI, you create intelligence in a lot of other aspects of society. That 30%, say, will grow to 40% of all GDP. That's 10 trillion a year. Now, what's spent a year? That's growing.
Human intelligence is the biggest part of GDP. This augments human intelligence in a remarkable way. And for people who think that it's pie in the sky, goodbye to them.
I don't think it is, because if you're talking growing 10 trillion as the pot at the end, as the golden pot at the end of the rainbow, what's spending $1 trillion a year, which we are not there yet.
But
you see the return on investment is pretty good.
The return is very little. I want to thank Hock Tan, Broadcom President and CEO, on this very big day for your company. Thank you, sir.
Thanks to be here, Jim.
Coming up, Cramer's keeping the West Coast party going and catching up with the CEO of Levi Strauss, seeing if the stock is in fashion. Next.
How worried should we be about the apparel business? Last Thursday, Levi Strauss reported a solid top and bottom line beat, but his guidance was underwhelming. Stock plunged more than 12% on Friday. Wall Street's not inclined to take its collective neck out for apparel right now. But I got to wonder if that decline was excessive, if not outright wrong. Earlier today, we got a chance to speak with Michelle Goss, the president and CEO of Levi Strauss, to find out what the story is. So take a look. Michelle, tell us where we are, because it's pretty darn gorgeous.
Jim, so we are in our brand new store that we just opened here at our headquarters at Levi's Plaza. We had a store here back in 2019, pre-pandemic, and everybody was really excited that we could be back here. And it's one of our newer store concepts. We can talk about that, but we're really proud of it.
I am looking at things I never dreamed would be Levi's. These are the innovations that I always knew could happen. It's happening under you. Tell us about the things that you never, ever expected to see here.
Well, one of the exciting moves we're making, Jim, is really moving from sort of being known as a denim bottoms or a jeans company to a head-to-toe apparel lifestyle company, or we like to call denim lifestyle, because it always has to start with the denim. You know, what this means is really going after the opportunity with women's. You know, women's is only 37% of our business. That should be 50% easily. And then this idea of, like I said, being beyond the bottoms. So everything that goes with denim has to always go through the Levi's aesthetic. But tops, you know, I feel like we're just getting going on tops. And we started a big reset about 18 months ago. We had another big quarter in tops, up 9%, yet it's only 22% of our business. So much upside, and if you can see around the store, there's a lot more tops in the store than you would have seen a year ago. And especially, it's not just T-shirts or sweatshirts or truckers. You've got wovens. Yes, you've got the classic Western shirts. You've got blouses, you've got sweaters, outerwear, you name it. And the consumer is giving us the permission to go there, because that's where we start all the time, is talking to our consumer.
And how much does Beyonce matter for reimagining?
Well, Beyonce, that was just incredible. I mean, she is, as you know, one of the most celebrated artists of our generation, and for her to name her song after us, and we leaned into that opportunity, and it's been tremendous. Exceeded our expectations, not only helped us to propel the women's business, but frankly drove brand equity overall. And as we sit here today, the Levi's brand has never been stronger. And it's something I don't say lightly, because it's been an incredibly strong brand for many, many, many years.
All right, let's talk about where it's particularly strong. When I was going over the numbers, I was shocked. UK, high mid-teens. Germany, high single digit. The international market is just huge for you.
It is. It is. Well, I mean, you know, coming off the quarter, we had another great quarter.
Yes,
I mean, this was our fourth consecutive quarter of high single digit growth. And what we're excited about is it was broad-based. It was U.S. and international. It was men's and women's. It was DTC and even wholesale. So get back to the question around international. There's a ton of opportunity around the world. I mean, I've spent a lot of time in markets over the last few years, just recently in Asia. So let's talk Asia. Double-digit growth.
Japan.
I was in Japan. I was in Japan. I was in Korea. I was in India. All of those markets have a lot of upside. You know, one kind of fun fact with Japan, years ago, that was predominantly a wholesale market for us. It's now 75% DTC, and the business has grown 50%, 50, over the last few years. So it is a great success story, a playbook we can take elsewhere. Look at India, over 1 billion consumers in that market, the growing middle class, the youthfulness. I am beyond excited around what our opportunity is in India, just as another example.
Okay, can you help us understand the model? For instance, if you speak with Elliot Hill at Nike, I think involved with a multi-year turnaround, he said, look, we emphasize direct-to-consumer too much. We have to go back to our old channel. Why is direct-to-consumer good for Levi, even if it really does not really work for Nike?
We see it as an and, not an or, of DTC and wholesale. We actually believe the better we do in DTC, the more it's going to help us lift wholesale. And in fact, we're seeing that right now, again, another quarter where both channels are positive, because we can get to the market quicker in DTC. We can learn things, and then we can take those learnings over to wholesale. But, big picture, why does it matter? I mean, it matters because we can have that direct engagement with our consumer. Being in the store is a great example, right? I mean, we have this head-to-toe expression, we have a faster go-to-market, and we can merchandise it in a way that our consumer is kind of leading the way on. And so it's really exciting, and the consumer is saying this is the top way we want to shop with Levi's, and it should be the best expression. The other piece I would add, of course, is in our stores, we have our people, we have our stylists, and they know denim like nobody's business. And so when you're a consumer coming in, that stylist is going to help you navigate, what's your next favorite pair of Levi's and what might go on top with it. E-commerce is also another huge opportunity for us. We've been gaining a lot of traction on that business, and they're complementary. But like I said, important for us, this isn't an either or, it's really both. And right now we're approaching about 50% DTC. I think that can get a little higher, but we're not limiting ourselves. We got a long road to 10 billion, and I'm confident, we're all confident we're going to get there.
That'd be big.
Yes.
Now, one thing that I think people have to understand is that you have been committed to keeping prices low for the consumer, even despite tariffs. So what are you doing to make it so that the price point is reasonable around the world?
Yeah, so it's a great question, especially in the environment where we have tariffs. Well, first, let's think about our portfolio of Levi's. So we have our core red tab Levi's. We have our newly introduced elevated blue tab, amazing quality, premium, beautiful aesthetic, rooted in Japanese denim. As we're talking Japan, they have a very high bar for denim. And then we have a value product, Signature, that you can find in the likes of, say, Walmart. And so we really can cut across all the consumer needs. As it relates to our red tab product, I mean, we have always, for decades and decades, stood for value, and value in the spirit of amazing quality, durability, and the right price point. As tariffs enter the scene, I mean, we're being super thoughtful, right? We're taking a holistic approach. One of the things we've been approaching all year has been more full price selling, less promotion. Promote where you need to, be thoughtful about that, but that is it's helping our average unit, our AURs, our average unit prices. And then pricing, when and how we take pricing, because there is a bit of tariff headwinds, will be very surgical on where and how we take that pricing. And the other piece, Jim, that we're doing is really looking at opportunities with innovative product. And consumers are saying, we're going to pay a little bit more for that innovation. So all of those things are, things we're examining to say, okay, with this new headwind of tariffs, how are we going to navigate? And that's on top of other levers that we are working through, working with our suppliers. We have a long, deep history with our vendors that go back decades, and they're doing their part too. And of course, our own cost efficiencies inside the business. So, it's complex, but we want to make sure we can do everything to make sure that at the end of the day, we're doing right for the consumer.
One of the things that I thought was terrific, I know we're almost out of time, but on the conference call, you made it clear that September was good, which makes me feel that perhaps you have a good feel for holiday season positioning.
Yes. I mean, we're optimistic. Our consumer has been resilient through whatever level of uncertainty is out there in the world right now. Our strategies are working. This DTC momentum that's going to carry on, both in terms of the assortment resonating and how our teams are executing. I mean, we have been rewiring this business to operate like a retailer, and you're seeing it. You're seeing it in the number, both on the top line and margin expansion. Product, denim lifestyle. We're still in the early chapters, but this holiday will be the broadest expression, most relevant expression we've had. And, we'll be selling things that people can wear to cocktail events and go back to work and everything in between.
And you'll get me a trucker outfit that I will purchase.
Absolutely. With maybe a little bling for the holidays.
Why not? It's be new for me, but I'll go for it. Michelle Goss is the Levi's president and CEO with a very good quarter and a very undervalued stock. Thank you so much, Michelle.
Thanks, Jim.
Coming up, from the heart of Silicon Valley, Cramer's catching up with the CEO of Rubrik and talking all things AI and cybersecurity. Next.
While I'm out here in San Francisco, I want to address the weakness in these enterprise software space that I like so much. Even the cybersecurity stocks seem to have gone out of style lately. Take Rubrik. That's a data security play that's come down dramatically from its highs over the past month. Maybe I'm missing something here. I think they're doing well. Let's take a closer look with Bipul Sinha. He's the co-founder, chairman, and CEO of Rubrik. We've got to learn that more. So, Mr. Sinha, welcome back to Mad Money.
Jim, so good to see you here in San Francisco.
Oh, well, thank you for having me. I know it's such a better city than it was last time. It's nicer. It's nicer. You can make comparisons odious. But let me ask you something. I've had a lot of cybersecurity people on since I've seen you last, and you have something in your most recent pack that I find very disturbing. And it says, cyber attacks are inevitable. Prevention and detection are not enough. Cyber resilience is required. So are we accepting the fact that people are going to break in, so we have to do something after they break in?
100%, because you can't prevent the unpreventable. Police can't stop all crimes. That's why you have judges and courts. And that's why resilience is so fundamental to every business. You need to understand what happens when you have cyber attack, what risks are you taking, and then how are you going to remediate and recover? Because keeping your business up and running is paramount.
Well, I imagine the best way to get in is not necessarily to try to safe crack it, but just to imitate it and be somebody.
That's precisely what is happening, because attackers have figured out it's easy to steal credentials, and credential-based attacks are the number one attack vector. They are not hacking in anymore. They are logging in.
So if that's the case, and I looked at the last quarter, and I thought, once again, I mean, we're talking about what I regard as spectacular numbers, okay? We're talking about net new subscription ARR annual revenue reached $71 million. You went to cash flow positive. The profitability is something that I like. Profitability is something you like. Profitability seems to have stunned people. I guess they just wanted to keep having you lose money?
We had a tremendous quarter. We grew top line more than 50% and generated 19% free cash flow margins. This combination of the top line and free cash flow margin at our scale is rare. So I will leave the market to experts, but we are delivering consistently at a very high growth rates. And you know what? Cyber resilience is the number one cybersecurity category, and we are leading that category.
Well, that's one of the things. I mean, George Kurtz, CrowdStrike, who's a good friend of the show.
Great partner.
Yes, great partner, because I don't think you got to have the full suite. Because once they're in, apparently, you don't even yourself know what documents you have. And they do find out, and they get what they want.
They are getting everywhere. And now with AI-assisted coding and AI-assisted social engineering, they know more about your business than some of your own people do. So our defenses has to be AI++. You have to go do more than the attackers so that you can keep your defenses up, keep your business up and running. And it has to be a combination of prevention and detection leaders such as CrowdStrike plus cyber resilience with Rubrik. This combination really delivers end-to-end cybersecurity.
Well, what happens when the ransom? What kind of ransomware is out there? How do you help the CEOs who look? Their job is not to fight these guys. Their job is to sell things and do things. What do you tell them about ransom?
Cyber attacks have changed. It used to be innocuous denial of service attack. Right. Now they're trying to destroy your business. They're trying to encrypt your data.
What, are they nihilists? What, I mean, they just wanted to. Aren't they asking for money, or they're just trying to crush the capitalist system.
They are trying to crush your business so that you are ready to give them ransom.
Okay.
And that's what they are after. And our job is to give businesses the confidence that do not pay ransom, keep your business up and running, because at the end of the day, resilience is the only answer to cyber attacks such as ransomware.
It's very bad. Now, one of the things that people look at the stock and drop, and I think that the drop may have been, you did have a comp change, but one of the things that I really like that you have said is, I'm a capitalist. I love profitability and cash flow. That is a little unique for people who own some companies out here that don't seem to mind losing money.
I am three things, Jim. I am an engineer, I am an investor, and I'm also a founder CEO. And I bring all three things together in a unique way to build and scale businesses. And that's why I understand what it means to spot a market like investor, how to build things, and how do you scale as a founder CEO.
There you go. And one last thing. I'm out here to learn from Salesforce about how great agentics are. But there's a downside to agentics, to these artificial intelligence agents. And you've been able to figure out a way to try to not let them take over your organization.
100%. You know, Jim, both of us have been in tech industry for a very long time. Agentic systems and these AI systems are 100 times more opportunity and 100 times more risk. I mean, they can do 10x more damage in 1/10 of the time. So we really need a way to protect against this unwanted agentic action. And that's why Rubrik launched what we call a rewind button. That rewind button lets our customers undo undesirable change by agents. Whether these undesirable change could be hallucination by agents or they are compromised by a threat actor.
Well, I'm glad you're out there. I think people want so badly to save money that they just bring in agentics and think that there's no additional cost to it. I say thank heavens for Rubrik.
Absolutely. We are here to give every customer the confidence to do AI transformation without taking undue risk.
I like it. That is Bipul Sinha, and I've got it, the CEO of Rubrik. I've got to tell you, I could not in a million years find out why this stock really went down, because I think it's an opportunity. Mad Money's but back at the break.
Coming up, Cramer takes your calls, and the sky's the limit. It's a fast-fire lightning round. Next.
So just a close spread on my step, where you plan it sale. And then the lightning round is over. Are you ready, Steve? Daddy? Time for the lightning round. Cramer's about to start with Richard, New York. Richard!
Choo-hoo! Happy Monday. Better
you
than
betcha.
Freaky Friday.
All right.
Anyway, I consider it an honor and a privilege to seek pearls of wisdom from one of the greatest in Wall Street, the master Jimmy Chill.
You're very kind. Thank you very much. Thank you very much. What's up?
Everything you've done for us. Listen, I've had a rough summer with this stock, and I need direction for success. The company is backed, set, FDS.
Yeah, what the hell is this? It's down. It's at 15 mobile. I'm not going to tell you to sell a stock down at 15 mobile. I like it. Can't tell you to buy it, but holy cow, it's way too cheap. Let's go to Ned in Ohio. Ned.
Hey, Professor Cramer. Good
Yes.
afternoon. It's good to talk to you again, sir. How's your day going?
It's a super day. They tell me I'm not smiling enough. They're wrong. I'm smiling on the inside.
Well, I'm sorry I didn't hear you.
I'm smiling on the inside.
Well, good
It's
for
a
you.
joke,
I'm
isn't it?
happy for you, my friend. I wanted to talk to you today again about a major global integrated mining company, a metals mining company. They have operations in the United States and in the Americas. They have one of the largest gold and copper mines in the world in Indonesia. And with the demand for copper and the rise in gold, copper for the data centers and elsewhere, I think that mine in Indonesia is going to come back. I think it's a company that's going to rise on the market.
And which one are we talking about? We're talking about Freeport?
Freeport McMoran.
Yeah, the stock, everyone's just thinks Indonesia is going to expropriate the mine. I don't think so. I think you're fine in the stock. And that, ladies and gentlemen, conclusion of the Lightning Round.
The Lightning Round is sponsored by Charles Schwab. Coming up, wrapping up his first day in San Francisco, Cramer's breaking down the move in speculative stocks and seeing where the growth is in this market. Next.
Jim Cramer, the diehard of the dollar.
Hey, Jimmy, love the show. My 5-year-old grandson loves to watch your show.
I have to thank you for making us money when it's there to be made.
Our world is a better place with you in it.
Today was a strong day for the averages, but if you're a traditionalist like I am, if you judge stocks purely on their earnings power and their valuations, then today was your worst nightmare. Yep, we saw an explosion in the speculative stocks, many of which are loss makers that are so hopelessly overvalued that they'll never be able to grow into their current market capitalizations. Now, we did get another round of what I regard as legitimate stock price increases from pretty much anything connected to the data center, all the accoutrements that the hyperscalers need if they want to avoid falling behind their competitors. Like I've said before, I think many of the speculative stocks are in bubble mode. The AI stocks are much more legitimate. Why? Because they're backed up by earnings. But what about the so-called regular stocks, the bread and butter members of the S&P 500? Well, they're not doing much at all. With the possible exception of the bank stocks, they rallied strongly today. Now, most of them are due to report this week. We're going to see if this normal group can go above the speculative riptide and get to the promised land of decent returns without a lot of insane risk. This weekend, I told Investing Club members that while I totally embrace speculation, something I actually recommend in how to make money in any market, I can't recall a market with this much speculative fervor since, yes, the dot-com era. I was hoping that could peak, if only because I don't want to see a dot-com style collapse. Instead, today we ran into the biggest tsunami of speculation yet, led by the chimerical nuclear power stocks, the futurist quantum computing stocks, and the rare or maybe not too rare earth minerals because, well, maybe they're not worth as much as we think. Of course, gold and the far more speculative silver increased 3% and 7% respectively, huge moves that weren't huge enough to catch much attention on daily today. Now, I got to tell you, this is a very challenging moment for disciplined investors who are trying to invest long term. What are you supposed to do? Stand by and let the yahoos, whoever they are, make all the money? Do you want to plot along in Cisco instead of blasting off with Rigetti Computing? You think you can make big money with a creepy Microsoft or an Amazon that's running in place while owners of speculative stocks like Monolithic Power and Bloom Energy make more money in a day than you may make in a year? I wish all stocks just coexist at once without the speculative stocks knocking everything else down. Perhaps they can. When a seasoned investor like Bluefield teams up with a Bloom Energy to power data centers, transforming a speculative entity overnight into a high-grade enterprise, maybe there's hope. But in a traditional cycle, the insiders who own these stocks start furiously dumping them at high levels. Hasn't happened yet until buyers are saturated. And then ultimately, their share prices drown from too much supply, taking the S&P down with them. Now, I want to believe that this time will be different. There's always a first time. It could be it. But I wouldn't put my money on it, which is why you need to ring the register on some of these speculative stocks into strength. At the end of the day, it's hard to believe that greed's been repealed. And greed is the root of almost all speculation. Like I said, there's always a bull market somewhere. I promise I'll find it just for you right here on Mad Money. I'm Jim Cramer. See you tomorrow from Dreamforce.
All opinions expressed by Jim Cramer on this podcast are solely Cramer's opinions and do not reflect the opinions of CNBC, NBC Universal, or their parent company or affiliates, and may have been previously disseminated by Cramer on television, radio, internet, or another medium. You should not treat any opinion expressed by Jim Cramer as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of his opinion. Cramer's opinions are based upon information he considers reliable, but neither CNBC nor its affiliates and or subsidiaries warrant its completeness or accuracy, and it should not be relied upon as such. To view the full Mad Money disclaimer, please visit cnbc.com/Mad Money disclaimer.